I bid you all good morning, good evening, and good night, wherever you may be watching this transmission. I got a very important article that is actually from today that was posted in Australia. It's by Lucy Dean, and it's on Yahoo Finance Australia. Now, I kind of need to throw this out there because I need to kind of brag about it a little bit on my end, because I brought it up 3 years ago, 4 years ago, 1 year, 2 years ago. And what are we talking about? Ticking time bomb, $3,600 problem coming for Aussie homeowners. What does that mean, Mike? Australians with interest-only home loans are facing a ticking time bomb with hundreds of thousands of those mortgages to tip over into principal and interest loans in the coming months. So they're going to want you to start paying down your loans. Actually start making payments towards principal. Actually pay the damn thing off, right? And here it is. This is the older videos I did. For this one's from 3 years ago. Australia's interest housing only crisis. You could see a US style meltdown. Big trouble in Little Aussie. Interest only loans. Put that up 2 years ago. In just the past 6 months, the amount of interest-only IO loans held by the banks have dropped around $36 billion. Australia, UK interest-only mortgages ready to go. And there's ones going back many years. Look, I guess that's ANZ Ponzi housing crisis in Australia. Oh, that's the ANZ group. We covered that. Australia's banking disaster ahead. Housing crisis Australia. Whose fault is it anyways? About interest-only mortgages. And here it is. There's so much. Yeah, don't pay till you die. Anyways, guys, don't forget to go here and join the channel and be part of it. Support the small YouTuber. Okay, so what's going on, guys? Well, we kind of know what's going on, and a lot of these terms are coming up, and it's hundreds of thousands of them that are coming up. Could people afford the extra $80, $400 a month, depending on these multi-million-dollar detached family homes that are just, realistically not worth anywhere near? Why are people taking out these dangerous mortgages? Well, FOMO's a part of it. Getting into the property ladder, getting into something well over their heads, and it's also the banks and the governing body's fault, because they shouldn't be approving this crap. They shouldn't be allowing people to do interest only. You're supposed to own your house. Well, that used to be, I guess, what it was about back in the day. But nowadays, it's almost like a dream to own. Like, not a dream, but like a fairy tale to own your own home. You know what I'm saying? Around 730,000 interest-only loans will become principal and interest loans over the course of 2020, with the average repayment increased by a whopping $3,600 a year. $3,600 a year. Most interest-only loans have set 3 to 5 year interest-only periods, after which they convert to more expensive principal and interest repayments. So you're thinking there, you're sitting there signing these documents, these mortgage documents, and you're thinking, well, in 3 years, I'll get a raise by 3 years or 5 years. I should be getting a raise. I should be making more money. That's what the average person thinks, that they'll be in a position where they'll be okay. They'll be fine. There's nothing to worry about. Well, there is something to worry about, right? Right. All right. And if borrowers took out a loan larger than the 2015-26 average of $395, the financial sting will even be bigger. So interest rate only borrowers will see their payments increase by as much as $789. So loan size, what are you buying for $200,000 in Australia? Like 2 cars? What are you buying? You're not buying nothing for 200 unless you're in somewhere outside of 200 miles west of Darwin or something, like, or maybe like 200 miles south of Perth. I don't know where you're going to buy for 200. So here it is. So if your loan size is 200 large, your loan extra per month is $202. 400 large, your loan extra per month is $316. If it's 600 large, you're paying $473 per month. If it's 800 large, you're paying $630 per month. And if it's $1 million, which is the average detached home price in Sydney and Sydney suburbs, and well, Melbourne's a little bit less than that, 800 to 940,000, depending on what area. You're looking at about $789 per month. So borrowers can be hit hard once their mortgage converts to principal and interest, as their repayments can increase significantly. Insights manager and finder Graham said on Tuesday, if you know your interest-only loan is expiring this year, it's important to factor this into your budget. So, guys, you could get a free TDS calculator. Let me see if I can find one here for you guys. Here, TDS calculator. Oops. Calculator, not for salary. We just need total debt service ratio. Right, debt service, CMHC. So you go to something like this. Oh, this one makes you fill it out page per page. I don't know. You could find one if you take your time. You could find a good TDS calculator here. Let's see if this one might show something here. Come on, man. Here we go. This is a fiscal year amount payment. No, this is not it either. There used to be a few total debt service ratio calculator. It's giving you all this free stuff and here we go. Maybe go to mortgage affordability calculator. Here we go. And it tells you how much you have. I had one up the other day. It was really good. It lets you put car payment, cell phone payment. It breaks it down individually and shows you what you're spending per year on what. So find yourself like a mortgage affordability calculator, guys. Do your own research on what your VIG or interest is going to become. Because when you're paying VIG on $1 million, that's a lot. Like how we would say, we would say it's very vigorous. You're paying a lot of juice or undercurrent or interest, whatever you want to call it. It's something, all right? The Finer Analysis Australian Prudential Regulation Authority data found that all of mortgages granted over 2015-16, 39% were interest-only, valued at $295 billion. So the banks have a lot of these I see these as bad debts on the books. They wanted to, I guess, hit their quotas or put more on the books so they don't see a decline in numbers. Branches are always pressured by the district managers. The bank's district managers are going around making sure that the branch managers are hitting their goals and what they're lacking to hit goals. And then you got the regional managers putting pressure on the district managers. And it's you know what I'm saying? So it gets stressful in these sectors of work. You know what I'm saying? If your interest-only loan is due, we got that. Banks will sometimes offer a discounted variable rate. Ooh, variable rate. On a case-by-case basis in a bid to keep your business. It's therefore worth negotiating with your lender for the biggest rate discount you can get. So if you did fall behind on a few payments, you might be in a bit of trouble because they might want the repayment in full. I've seen that happen before many times. Around 32.8%. 1.1 million Australian households are experiencing mortgage stress, according to the latest figures from property analysis from Digital Finance Analytics. Digital Finance Analytics principal Martin North defines mortgage stress as cash flow challenge. So remember, we went over this disposable income that Australians have. For every dollar they earn, they own pretty much back $1, $2 or more, $2. Their income to return or income to disposable income is horrific, and that's why you're seeing consumer confidence dropping to the floor, and that's why you're seeing all kinds happening. And if you go back, there's a video I did like 3.5 years ago for that too. Once they introduced this in, I think it was 2016, I did a video where I discussed this. I'm just trying to see if I could find it for you guys because it was a really good video. I did this before I moved here to the town I'm in over 3 years ago. Yeah, I'm just trying to see here. Yeah, we got lots of open lines here. Open lines shows I have here. Yeah, and then I did one about the Australian brokers that were just screwing people around. Holy crap, man. Is this it? Negative rates, bail-ins? No, that was like 5 years ago. Okay. All right. I can't find it here. I must have titled it a little bit differently. But anyways, okay. If households are paying out more each month, including mortgage repayments compared to the income received, they are in stress. So obviously, if you make less than what you owe, you're screwed. This is not defined by a set proportion of income going on the mortgage, he said early February. People are house broke. That's what happened. People want to compete with these foreign investors that come in and just bid up these homes that are realistically worth 400 grand and end up paying. Remember that house that video I did the other day for you guys? That was actually a big deal. This one here got me a little bit of bad press from some people, saying I'm misguiding people. Where did this go? Rental. Yeah, what, $2.87 million, but that's what $1.2 million buys you in the States. This is what this house here for $2.8 million for this thing. This thing, like it's attached to two other houses. I couldn't believe that. I couldn't fathom that. When I saw that, I couldn't believe that. Anyways, while mortgage stress is variable across the household groups, it's more prevalent among young growing families and households on urban fringes. But the largest cohort are in the disadvantaged fringe, where incomes are below the average as well. More than 300,000 households in the group exposed, comparison to 47.2% of all households in this segment. And wages are below average because wages haven't kept up with inflation. We know this because everything's so damn expensive. You should be able to go out and have dinner with the family once in a while. You should be able to go out and see a movie once in a while without worrying and pinching pennies. Well, that's what's happened now. And it's gotten so bad in Australia that the banks are working out with food banks. The banks are working things with food banks to get vouchers from the banks so people don't default on their mortgages so they can buy food because they can't afford food, a basic necessity. Remember here on the channel, guys, on trends in the housing market, we covered the Maslow's hierarchy of needs. We've been covering that for years, discussing needs and wants. You need shelter to protect you from nature. You need food to keep you alive, right, and keep you maintained and going, right? But it's getting to the point that the needs are becoming unobtainable. Anyways, however, ratings agency S&P Global paints a more reassuring picture of household spending, noting that the number of households are in arrears fell in December. So what? People are doing what they can. It's like a fight to the knife. They're out of options now. They're out of ammo. It's like a fight to the knife now. What do I do? We expect low interest rates and relatively stable employment conditions to keep arrears broadly stable in the coming months, but performance will vary across the sectors and borrower types, and S&P Global ratings analyst Aaron Kitson said. Make your money work with Yahoo's Finance Delivery newsletter. Now, let's go here. Now, Australian stocks dive for a third session, and I've been following this, and I've been following the ASX here, and all lords. Here it is, man. Everything's going down. Australian dollar's having a really tough time keeping above 65 cents to the U.S., and gold is pushing. It looks like it's going to push back again to the 1650 mark, because it's trying to get down and it's finding a way back above water over the 1650 mark. And oil's just it can't stay above $50 a barrel. And Bitcoin is around 9 large US. What else have we got? FTSE, the FTSE, and let's see the Nikkei. Where's the Nikkei? The Hang Seng is down, of course, and the Nikkei is down again. I think 4 or 5 straight, 6, 7 straight days. And if you go back to the channel, guys, you will see that, let me see if I can find it here. Sorry about that. It's under my videos. It was an older video I did a week ago where Japan has already admitted that they are, here it is, bank, where is it? Can't say that. Where is that? Zombie. This is zombie. Here he is. Japan's terrible GDP report. They threw it out there. Look, we're in a recession. That's it. We can't. That's it. It's the zombification of Japan's 25, 30-year zombification since they fell off I guess the technology ladder in the mid 90s. They were doing good when Nintendo came out and all that's and exporting and doing really well technology wise. They were 20, 30 years ahead of the world. And then boom, something happened in the mid 90s, and then inflation, stagflation, unemployment started going down, birth rates down. So, you know, China's suffering shortage of workers. Guys, go check out my channel if you're bored. Honestly, just go watch something random. There's some pretty cool stuff in here. Do a lot of work for you guys out there. Guys, if you want to support this transmission, you can click the join button. And also, if you guys want to, you just share a video. Just share something. Look, Alpha's on this. Share it. It's cute. And look, this one has Gizmo. Check it out. Let me know what you guys think. Thanks for watching.